We do the Global Investor Insight Survey each year for actually the past decade. It's very robust. It covers more than 1,000 professional investors over all of the markets in which we operate, and actually they account for 67 trillion of assets. So it's a really good benchmark and bellwether for how people are feeling at any point in time. And this year we did the survey after Liberation Day, so we were in the field talking to clients at the end of April and through May. And for me, there are three big takeaways. Firstly, we can see that now 4/5 of all investors are going to pivot more towards active asset management strategies. And I think that really reflects the need for a forward-looking approach or a contrarian approach to how people manage their money because of the concentration that we're seeing. As you may expect, we can see that 63% of investors are worried about the impact of trade, tariffs and negotiations. Now, I think the interesting thing in that actually is the difference between that as the number one answer and the second answer, which is actually the impact of an economic downturn or inflation. So we can really see that those trade tariff discussions are really weighing on investors' minds. And that led, I think, to the third really interesting thing for me, which is more than half of investors now put portfolio resilience at the top of their list in terms of how they put the portfolios together. And that's really then the rise of diversification. It went out of fashion for quite a long time, right? We all invested ultimately in the US markets, which were highly concentrated. So I think that diversification piece across asset classes, across geographies, and across currencies actually is really important.
It's kind of a rebasement of your industry, it seems. So let me ask you about the role of the dollar, because clearly hedging against the dollar seems to be also on top of asset managers' minds. So how do you do that? Because the currency is so weak.
Yeah. So I think we saw comments from the States about the strength of the US markets in absolute terms overnight. And they are back from a dollar perspective, back to where they were at the time of the inauguration. But of course, what we can see is the US dollar is significantly weaker. So for international investors, we're seeing lower returns because of that decline in the dollar rate. And I think for many years, we hadn't really focused heavily on the impact of the currencies. And so investors are thinking about how do they hedge that currency exposure and the dollar exposure. That might be through taking out specific hedging instruments or actually creating a more balanced portfolio across different currency classes.
What are you doing in the US given that Section 899 now?
Well, you know, we've seen lots of clients come to us and start talking about Section 899. And of course, what the real concern is the extent to which that has weaponized the US capital markets for international investors. Yeah. So we haven't seen any dramatic shift from investors today, but it's definitely part of the conversation and is one of the things that in the background that people are eyeing up when we think about the attractiveness of some of the US investments and the US market.